All right, let's get right into it. We've got a real stock market head scratcher today. It involves a company that was struggling, a price chart that just went completely vertical, and one single document that looks like the smoking gun. So this is the big question, right? How on earth does a company that's been facing some serious financial headwinds, a company that wasn't really on anyone's radar, suddenly see its stock price do, well, this? I mean, just look at this. We are talking about a 500% surge, not over a year, but in just a few days. This is for a medical aesthetics company called Venus Concept. This isn't just growth, it's an absolute explosion. So you gotta ask, what in the world could make something like this happen? Okay, so the start of our investigation, it's not some hot new product launch or a huge earnings beat. Nope. It all starts with a piece of paper. This is where the whole bombshell was just sitting there, hidden in plain sight. The real trigger here wasn't some amazing new technology. It wasn't record profits. It was a legal document, a boring old SEC filing. But this filing showed that one single investment firm had, pretty quietly, bought up pretty much the entire company. And here's what that looks like. You've got Madryn Asset Management now holding a mind-boggling 91% of Venus Concept. That leaves this tiny, tiny little 9% sliver for everybody else, for the public, to trade. Just let that sink in. Almost all the shares are now locked away off the market, and that is what sets the stage for total chaos. Okay, so one firm buys up all the shares. How does that make the price go vertical? Well, it creates this classic market situation called a squeeze. And if you want to understand this whole story, you have to understand how a squeeze works. And to get the squeeze, you first have to know this term, public float. It's really simple. It's just the number of a company's shares that are actually out there, available for you and me and everyone else to buy and sell on the stock market. It's our piece of the pie, basically. Let's put it this way. Imagine there are only 100 pairs of some super hyped, ultra-rare sneakers in the entire world, okay? Now, what if one rich collector swoops in and buys 91 of them? What do you think happens to the price of those last 9 pairs when everyone else is scrambling to get one? Yeah, the price goes through the absolute roof, right? That is almost exactly what happened. So this kicks off a perfect storm. First, Madryn locks up almost all the ownership. That means the number of shares you can actually trade, the public float, basically vanishes. So then, when a bunch of traders see the stock moving and jump in, even a tiny bit of buying pressure sends the price absolutely parabolic. There just aren't enough shares to go around. Okay, so we get the market mechanics, right? It's a supply and demand thing. But what about the actual company? The business behind the stock ticker? This is where the story gets a big, big dose of reality. And this is where things get really weird, because you see two completely different stories playing out at the same time. In one corner, you've got all the market hype, a 500% stock gain, insane trading volume. But in the other corner, you have the actual business reality. Their revenue is going down, and they're consistently losing money. The stock chart and the company's health are going in completely opposite directions. Now, to be fair, the company has been trying to turn things around. I mean, they were dealing with about $76 million in debt. They even did a reverse stock split, which is basically just bundling shares together to pump up the price so they wouldn't get kicked off the NASDAQ. They also sold their hair restoration business to get some cash, and that helped them pay down a good chunk of that debt. So yeah, they were making moves, but this 500% explosion, that was definitely not part of the turnaround plan. So if you're an investor and you see that crazy chart, you have to be asking, what does this all mean and what happens now? And that brings us to the very, very real risks here. Yeah, there are some major red flags you got to know about. First, this thing is wildly volatile. A price that shoots up this fast can crash and burn just as quickly. Second, liquidity is a huge problem. With 91% of the shares locked away, trying to sell your shares if you need to could be really, really tough. And then there's the big one. Madryn has straight up said they might just take the company private and pull it off the NASDAQ completely, all while the actual business problems, well, they haven't gotten anywhere. And really, that just sums it all up, The consensus from market watchers is crystal clear. This whole surge is about the weird ownership structure and a bunch of momentum traders jumping on board. It has almost nothing to do with the company's business suddenly getting better. And this whole crazy situation just leaves us with this massive question about the market today. When a stock's price completely disconnects from the company's actual reality, what is it even worth?